Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. I'm speaking with Adam Davidson, CEO of Trident Royalties. Great to see you, David.
Hi, how you doing?
Good. So this is the first time that we're having a conversation. Can
Mm.
you give us an overview of Trident Royalties and your unique value proposition for investors?
Absolutely. I think most of your investors are probably familiar with the mining royalty model. What they're probably not as familiar with is a mining royalty company that's focused not exclusively on precious metals. It's a relatively large sector, sort of at the moment, circa 70 billion in aggregate market cap, but probably close to 95% of that market cap is in gold royalty companies. And as you've seen, they'll occasionally do non-precious, specifically copper, but by and large, they're gold focused companies. And yet, gold is only about sort of 25 to 30% of the overall mining sector. So it leaves untouched from a royalty perspective, sort of over 2/3 of the entirety of the mining sector. So that's the dislocation that we saw at Trident. The fact that there's several multi-billion-dollar gold-focused royalty companies, and then in aggregate, in terms of active diversified mining royalty companies, less than 2 billion in total market cap, a clear dislocation. I think in time we'll see several multi-billion-dollar diversified royalty companies. So when we launched Trident, we'd secured one cash flowing iron ore royalty. Fast forward to today, we've got a total of 21 assets, 13 of which are cash flowing, spread across lithium, copper, gold, silver, iron ore, mineral sands, but actively looking to continue to broaden out that diversification.
So, from an investment perspective, I wonder if you could sort of just explain what are the advantages of the royalty model versus a direct investment in companies? Like, what type of exposures do you provide investors?
Yeah, sure. The biggest thing with the royalty is that it's an instrument that allows us to retain exposure to the top line of the P&L, the profit and loss statement. So effectively, we get a cut of the operator's revenue. So if we've got a 1% royalty on a given project, if they generate 100 million in revenue that year, we get a million of that. Now, the reason that differs pretty materially from an equity investment in a mining company is, as we know, if you have a mine operation that generates 100 million in revenue, they may have 115 million in costs. So you could actually sort of have negative profit, negative value to that equity. A royalty company doesn't have that risk because we're getting our percentage of their top line. So the biggest thing is that we're not exposed to the cost profile. We are only in as much as if the mine shuts down, obviously the revenue ceases. But outside of that, we're not exposed to that sort of movements in diesel price or labor price. We're just exposed to the commodity price and their production, which is a great position to be in. Now, the reason people invest in mining equities is because 80+% of mines that are built extend their life or expand the production profile. But we still get exposure to that, obviously getting exposure to their revenue. If they extend the mine life, we still get that upside. So it's a nice blend of sort of being in this slightly more protected position, almost like debt in that sense, but you still get the equity style of exposure. So really great instruments. And then the trick is to aggregate these into a portfolio. As I mentioned, we're got 150 million US market cap company. If we were a mining company, we'd probably have one single project, maybe not even in production yet. As a royalty company, though, we've got 21 assets spread around the globe, multiple commodities. So, uh, on top of the instruments being sort of de-risked relative to equity, sort of the business model itself, Trident as a company is lower risk profile relative to a mining company.
Yeah. So, speaking of assets, one of your key assets is the Thacker Pass lithium royalty with Lithium America, which recently underwent a 275 million equity raise. Could you provide some insights on what this means for your company and your shareholders?
Yeah. Next thing is, so not only was there that recent equity raise, but a couple months ago, the Department of Energy announced a $2.3 billion loan through the DOE loan program for Thacker Pass as well. And then you couple that with General Motors putting in 650 million to have the offtake of the stage one lithium production. They're now the largest shareholder of Lithium Americas. So you got a $3 billion project that's now fully funded and rumbling into construction in the second half of this year. I mean, it's a tier one globally significant asset, the largest lithium resource in North America. As many of your listeners or viewers are probably aware, the U.S. doesn't actually produce much domestic lithium, but it's a critical mineral. and it's been classified as such by the government. So hence the support to get this thing built. So you've got an environment where there's a lot of money being put into sort of key strategic initiatives, everything from chips manufacturing to, in our case, securing critical resources. And Thacker Pass is one of these sort of projects. So from our perspective, we got a royalty over the project. It's over the entirety of the project. It's uncapped. It extends life of mine. It's a 40-year initial mine life. So it's going to run for multiple decades. I'm sure extend beyond that. So for it to be now fully financed and moving into meaningful construction activities was a very big day for us. So I don't know that the market's quite picked up on that yet, but a huge step forward for Trident because that is our cornerstone asset.
Mm. And the other commodity that you're in is gold, and we've seen the market is really having a positive outlook for gold. So with your gold portfolio and with the Greenstone project commencing production, what does that mean? Could you provide some insights on what it means for your company's future and your shareholders?
Yeah, so for background, our two biggest assets are Thacker Pass, which is not yet in production, but will be pretty significant revenue. I mean, if you look at sort of consensus lithium prices on the long term, once that asset's fully ramped up, it'd be generating sort of 20 plus million to us per year. So for $140-50 million market cap company, that's generated 11 million in revenue last year alone. So we do have other assets, as you touched on. Our gold offtakes portfolio is kind of a collection of assets. Greenstone is only the latest to sort of be commencing production, slated for this month. And I think most analyst estimates have it sort of paying about a 1.5 million to Trident on an annual basis. So a good incremental increase in revenue. In fact, the bulk of our current revenue, that 11 million from 2023, the bulk of it was linked to gold. We do have some copper revenue from a copper royalty and some iron ore exposure. Had a little bit of mineral sands last year, but the bulk of it's gold, which in this environment, obviously, we're pretty happy with. As of today, gold is touching up towards $2,400 an ounce. When we bought the gold offtakes portfolio, our biggest gold asset, it was sort of around $1,600-1,700 an ounce. So we've been pretty fortunate to catch an upswing in the commodity price cycle there. And then the assets that, most importantly, the assets that underpin that portfolio perform very well.
Is there anything else that the investor community can expect from the company in over the short term, like any catalysts that are coming you'd like to talk about?
Yeah, there's quite a few. I mean, that's one of the benefits. When we first listed, we were only sort of closing in on 4 years old in terms of being a public company. But when we first listed, we had one royalty. And really the share price was driven by new acquisitions. Now that's still always going to be a driver. Last year alone, we did 5 acquisitions, done one small one thus far this year. So we're a growth company and we're focused on building out the portfolio. But you also get this dual fired effect where now that the portfolio has got some critical mass, events like Greenstone turning on and that asset moving from a development stage asset to a cash flowing asset, there's a re-rating that naturally coincides with that. Similar, we touched on Thacker, but to have them now fully financed, that asset's been materially de-risked over the last 12 months. So, but we've got a portfolio of 21 assets. So you kind of get this constant churn of value accretive events. And really it comes back to royalties as a business model. The fact that when you have a royalty over a project, it's an undilutable position. So if an operator goes out there and raises more equity, we applaud that. That's more money going into the project. Obviously, if you're a shareholder, you're getting diluted down. So it's one of the beautiful things about royalties as instruments. On top of that, they more often than not survive bankruptcy, all that sort of stuff. Depends on the legal jurisdiction. But when a royalty is on a property, that percentage is there and it's there in perpetuity. So, to have the assets advancing in the right direction and sort of get this constant organic value creation from assets moving in the right direction. One of our most recent deals just raised 20 million in an equity raise to go towards the projects. I mean, you get these values sort of generative events on top of new acquisitions. I think between those two sort of double-barreled approach, you see a lot of NAV per share sort of increasing time over time. So yeah, we'll continue to look to add new assets, but I think we expect quite a bit of good news flow out of the portfolio as well this year.
We certainly provide some good, business case for the royalty model. Thank you for sharing your company news developments today with me.
Great. Thanks so much.
And thanks everyone for watching. Join us again next time for another engaging conversation on CEO Insight. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. See you next time.